Bitcoin is headed for its largest increase in 2 weeks as BlackRock became the latest large name to signal a bit of an interest in the tech that underpins digital currencies, blockchain. Now, the biggest crypto coin was up 5.5% to over $6,500 on Monday, according to composite prices on Bloomberg. Rival coins like Ripple, Ethereum, Litecoin are all up by a comparable margin. Now, Bitcoin hasn't notched a one-day gain of more than 2% since the 2nd of July. London's Financial News reported that BlackRock has formed a team to look into how the world's largest asset manager can take advantage of the cryptocurrency market and blockchain as well. So then let's dig a little deeper into this specific topic, but to our context here in Africa. Richard D'Souza is a partner at Altcoin Trader, one of the big crypto exchanges in South Africa, joins us now live from Johannesburg. Thank you for your time. You're the oldest crypto exchange in South Africa. What's trading been like for you from January 2017 to date, especially after that December peak?
We've noticed a lot of trade. We notice our exchange is following the international trends very closely.
Have you seen the same level of volatility that we've seen in other markets as well?
Look, we've certainly seen exactly the same amount of volatility. South African exchanges generally follow international exchanges. We do see that coins, cryptocurrencies as a whole are slightly more in South Africa, and that's just simply because of the difficulty in getting currency out of the country. But it is following a close pattern, and we know that this is exactly what is happening all over the world.
Right. Bitcoin down about 53% so far this year. Ethereum not entirely far behind. What exactly is driving that decline?
Well, you know, I think we need to put into perspective that decline because a year ago, on this date last year, Bitcoin was trading at 2,400 odd US dollars. And today it's trading at 6,700 US dollars. So that is an increase of 250%. Now, a lot of the public and the media hype has focused on the highs of December 2017, when Bitcoin was at about 19,000 odd US dollars. And they're taking the point of reference from there and saying that we've seen a massive bear market. But there's very few assets that would show you a 250% increase year on year. So because of the spike, everyone thinks that we're in a bear market, and it is probably questionable. Also, with companies like BlackRock coming into play and showing interest in Bitcoin, BlackRock is one of the companies that has the largest amount of assets under management. We're talking about 6.3 trillion US dollars. If they were to get authority to have ETFs in Bitcoin, we could see prices of Bitcoin in the next couple of months going way past December's 2017 highs. So it's very exciting times for cryptocurrency. And I know that the media is constantly saying that we're in a bit of a bear market, but if we put it into perspective, it actually looks very positive.
All right, and I should point out for the benefit of our viewers, Bitcoin right now is at about $7,365 or so. But going back to the essentially what BlackRock is trying to do with cryptocurrencies, isn't the value for them here really the blockchain as opposed to investing in the cryptocurrencies themselves?
Look, that is a highly debated topic because blockchain has, unfortunately, and I say unfortunately, become the buzzword with new business. Blockchain is basically an advanced database that has the public eyes on it and cannot be changed. And that's why it has so much value in our modern day society. However, this investment in blockchain is really, I think, overhyped at this stage. Companies will be investing in the assets. This is simply my opinion, but the asset like Bitcoin itself, there's only going to be 21 million ever made. So if companies like BlackRock got involved in it, Bitcoin would be extremely scarce, and I think that the focus should start being moved off of blockchain and into the actual asset, the intangible asset of Bitcoin. Blockchain, I think, is greatly misunderstood, and the capabilities, although mind-boggling, and we can't even fathom what they could do in the future, it's greatly misunderstood by the public, and this buzzword of let's rather invest in blockchain it's not practical right now where we are at the moment.
Right then, so that leads me to Project COCA. It was a test of how blockchain tech could work with banks. 7 South African banks took part in it. It was an experiment being run by the South African Reserve Bank. The SARB is of the view that this tech, even though it worked well in the trial, it's not ready for prime time yet, a rollout in the market. Do you agree with that position?
Look, I do agree with that, and I'd like to take my hat off to the South African government for Project COCA. They did some amazing thing. I was personally at the launch and at the demonstration that they rolled out, and it allowed some things that we've never seen before in the financial space, which was that basically the SARB wouldn't have to approve a transaction. It could be approved by some of the other banks, and that sort of controlled decentralization makes the project amazing. But I would have to agree with SARB that at this stage it's not ready to be rolled out. There were a couple of glitches, but hats off to the South African government. They're playing in the space. They rolled out an amazing project, and I think that in the years to come we will see the benefits of this cryptocurrency and of blockchain in the central banking systems.
Go into a bit more detail on that. Why is it not ready for prime time? Because it worked relatively well. So what was wrong with it?
Well, there's a lot of legacy systems in the current banking infrastructure. So for them to change it and to test it to the point where, I mean, it's currently in a sandbox environment. But if they were to roll this out, we were to be working with real money. The glitches that have come up previously and the things that they've monitored and they've tried to put in place in a very short space of time, I think that the testing and the throughput, the amount of transactions per second that they've achieved with their demo model is very questionable, and that's why I think that they are erring on the side of caution and making sure that they would need to do possibly a year or two of testing before it could be rolled out. And we know that the banking system is a massive ship, so to steer the ship and to turn and change course typically takes 7 to 9 years. So that's why they've said that it's not ready, and I think that the caution that they are showing in this is prudent.
All right, we'll leave it there for the time being. Richard D'Souza, partner at Alcon Trader, thank you very much for your time.